Interest rates. Yes, the thing you've been hearing about in the news for the last 12, 18 months. Interest rates are going up. Interest rates came back down a little bit. They're back up. Interest rates are 100% driving this market. And it does have a big, big effect on the buyer's willingness to step up to the plate and purchase a property. For every 1 point interest rates go up, 5 million people drop out of the buyer pool, right? That's a big, big deal. For every 1 point interest rates go up, a $700,000 loan goes up by $400 a month on average, right? These are big things that definitely take buyers out a little bit. But what I think a lot of people don't see is taking sellers out of the market. Imagine you bought a house in the last 5 years. You probably have an interest rate around 3%, maybe 4% max. Now, are you really motivated to put that house on the market and go buy a new home at a 6.5% interest rate? Not so much. And that's really why we're seeing so much less inventory in this market. And it's still a seller's market. 2, 4, 5, 10, 20 offers on a property. That's because there's just not enough sellers that are willing to sell their property. Now, we're starting to see in the last few weeks that's starting to loosen up a little bit. We're usually seeing 10, 15, 20 listings a week come on in Hoboken. Luckily, the last few weeks, we've seen 20, 25, 30 come on, starting to loosen up into the spring. As interest rates came back down, they were up around 7 for a lot of this quarter. They're back around 6.25, hopefully trending towards 6. And that's going to start to loosen the market up and become more of a neutral market and less of this seller's market that we're seeing now.